Hello and welcome to the FT headquarters. Today I have with me Patrick Monge, Head of APAC and Emerging Market Strategy at BNP Paribas Investment Partners. You mentioned the US policy earlier, you've mentioned liquidity, and we've had abundant liquidity for the past 6 years, which has fueled the growth of the developing economies, where a lot of money has flowed from the developed world. But do you feel this trend could possibly come to an end with the imminent termination of quantitative easing by the US Fed?
The liquidity that we had, and there was plenty of liquidity in the world, and still there will be plenty of liquidity remaining in the world moving forward, was invested, in fact, in emerging markets, but mostly in the bond markets, not in equity markets. And you see at the bond yield development in emerging markets and high yielders in developed markets that has been a big factor driving down yields in the world in general. But very little has been invested in emerging market equities. There has been some doubts about emerging market equities, which was linked particularly to the fact that many of them are very high betas towards world growth. And some of them, quite a few, are very sensitive to commodity prices and to the strength of the US dollar. So basically that has been the most important determinants for the underperformance of emerging market equities versus developed equities in the past 3 years. And if you decompose emerging markets in regions, for example, you will see that the biggest exporters of commodities, that is in LATAM, have suffered the most in terms of underperformance.
So when we look at those exporters who are affected by the fall of commodity prices and oil in particular, do you expect the likes of Brazil and Russia, which is also subject to quite stringent sanctions, do you expect them to continue to suffer?
Probably yes in the short term. Certainly for Brazil. Brazil is a market which is, compared to other markets in the emerging market universe, a little bit more expensive. Secondly, not really as an economy a big commodity exporter. It's quite neutral, but in the market composition, a lot of commodities, oil and food, so that will impact the market index very strongly. And Brazil is a story for the time being, which is no reforms, very slow, sluggish growth, decelerating basically, quite high inflation, sticky current account deficit. So Brazil is not really the country where you want to go at the time being in terms of investments. There's a strong potential longer term because it's a country with full of resources, very young people, so demography is very positive. And if the government, the new one, would go to a better reform agenda, a little bit more market-oriented, which we believe will be the case, but we have still to wait for it, then Brazil might become quite a compelling investment case in the emerging markets.